Hello, Charteds. How are you all? Sir, very good, sir. We were into revision of partnership. Yesterday we had done fundamentals. Today we will do questions on admission, retirement, death, that is reconstitution. Am I clear? Yes, sir. Now, Chartered, there is called treatment of goodwill. Correct? There is treatment of goodwill. Listen, how do we go about? Step 1, profit sharing ratio. Step 1, profit sharing ratio. Step 2, valuation of goodwill. Step 3, treatment of goodwill. Correct? Treatment of goodwill mein charted. A. If there is book value of goodwill, that means if goodwill is appearing in the balance sheet, it should be written off among old partners and old PSR. That means we pass the entry old partners to old PSR. This entry is passed. Sorry. Old partners to goodwill, this will be an old PSR. That means if there is goodwill appearing in the balance sheet, then such goodwill should be written off amongst old partners in old PSR. Am I clear? Yes, sir. Second chartered, we pass the entry gaining partner to sacrificing partner. Gaining partner to sacrificing partner. Now chartered, this entry is passed always. This entry is passed always. But this entry is passed, first entry is passed only if there is book value. If there is book value, you will write it off. If there is no book value, you will not write it off. Am I clear? Understood, yes or no? If there is book value of goodwill, you should remove it. Sir, why should we remove it? Because goodwill cannot appear in balance sheet. Sir, why goodwill cannot appear in balance sheet? Because we have self-generated goodwill. There is no cost involved. Oh, so if you generate goodwill by efforts, that will not come. But sir, if you purchase goodwill can come. But in CA Foundation, we do not have purchase goodwill in our syllabus. Achha. So that means in CA Foundation, goodwill can never appear in balance sheet. If it is appearing, that is wrong and we should remove it. Correct. By passing what entry? Old partners to goodwill. If you remove goodwill, asset will decrease, credit asset. Correct. If you remove goodwill, asset will decrease, it's a loss should be debited, but loss will decrease partner's capital, therefore partner's capital is debited. So you removing goodwill is credited, because decrease in asset, therefore it's a loss will decrease capital, therefore capital is also debited. Correct, chartered. Okay, shall we move ahead? Yes, sir. Now chartered, second, gaining partner to sacrificing partner. The partner which is gaining share, the partner which is sacrificing share. Gaining partner has to always compensate sacrificing partner, that is common sense. Gaining partner has to always compensate sacrificing partner, that is common sense. Now chartered, gaining partner will compensate sacrificing partner. If gaining partner is compensating sacrificing partner, gaining partner's capital account will come down. If gaining partner's capital account come down, it should be debited. Sacrificing partner is compensated. Yes. If sacrificing partner is compensated, therefore his capital account will increase. Therefore, credit. Yes, sir. No, sir. Yes, sir. Number C chartered. If new partner brings his share of goodwill, then cash to new partner. If new partner brings his share of goodwill in cash, then cash to new partner's capital. If old partners withdraw their share of goodwill in cash, then chartered the journal entry is old partners capital to cash. Old partner's capital to cash. Correcta, incorrecta? Correcta. Now chartered. Understood? Yes, sir. So treatment of goodwill mein first entry is, if there is book value, remove it. Second entry is gaining partner to sacrificing partner. Chartered, this is most important entry. This is most important entry. Am I clear? You have to pass. Third, if new partner brings a share of goodwill, then you will pass the third entry. If old partners withdraw their share of goodwill, then you will pass the fourth entry. So chartered, first, third, and fourth is conditional. First is based on if there is book value. Third entry is if new partner brings his share of goodwill in cash. Fourth, if old partners withdraw their share of goodwill in cash. Step 4 chartered. Step 4th, special adjustment. Special adjustment means A, asset or liability sold or taken over by a partner. Asset or liability sold or taken over by a partner. Okay. B. B chartered is rectification of errors. B, rectification of errors. C, joint life policy. Joint life policy. Joint life policy mein there are, that I'll discuss as and when the question comes started. D, PL suspense, that is share of profit of retiring partner. Share of profit of retiring partner. Now chartered JLP mein there are 3 situations. Situation 1, JLP mein there are 3 situations. Joint life policy. It is a life insurance policy in the name of partners, but it is asset of the firm only. It is in the name of the partners, but it is asset of the firm only. Premium is paid by firm. Money will be received by firm, but it is in the name of partners. Why? Because it is an insurance policy. Second, in this joint life policy, all the partners will have right. In this joint life policy, all the partners will have right irrespective of whose name it is. It can be in your name, it can be in my name, it can be in third party's name. Joint life policy ka right. In joint life policy, everybody will have the right irrespective of whose name it is. Am I clear? Okay, so it is asset, it is in the name of the partner, it is asset of the firm, premium is paid by the firm, money is received by the firm. Correct? But since it's an insurance policy, it is in the name of the partners. And third point, all the partners have right in all the joint life policy irrespective of whose name is this. Correct? Yes. Now chartered, question remaining silent. Show JLP in balance sheet at surrender value. If nothing is mentioned in the question, QRS means question remaining silent. If nothing is mentioned in the question, show JLP in balance sheet at surrender value. That means if it is appearing in the balance sheet at surrender value, no problem. If it is appearing at more than surrender value, then reduce it. If it is appearing less than surrender value, then bring it to surrender value. But all this you will do using revaluation. Show JLP in balance sheet at surrender value using revaluation. Am I clear? Yes. Second is joint life policy is surrendered. That is Money is received. We have closed the policy and we have received the money. Then chartered, you will pass two entries. Entry number 1. Profit or loss. And second is money received. Profit or loss. Second is money received. Now, profit or loss chartered can be JLP to revaluation or revaluation to JLP. Profit or loss can be JLP to revaluation for profit or revaluation to JLP for loss. Revaluation to JLP for loss chartered. Am I clear? Money received. Cash bank to JLP. Cash bank to JLP. Now, money received. Money received in case of death, we receive policy value. In case of retirement, we receive surrender value. If JLP is surrendered or money is received, then two entries you are supposed to pass. First is for profit or loss, second is for money received. First is for profit or loss, second is for money received. Sir, oh sir, can we combine this and pass? No. Combined entry is not wrong entry, but beta it will be difficult in ledger posting. Because suppose if I pass the entry, cash bank account debit 5,000 to JLP 4,000 to revaluation 1,000. Suppose I pass this entry, 1,000 is profit. Then in revaluation account, when I will write buy JLP, no, 1,000. You will say, why sir, why buy JLP? There is a problem. Then in cash bank, if I write no, to JLP 5,000, then also you will say, why sir, there is a problem. It's better to pass two entries. It's better to pass two entries. First I'll pass JLP to revaluation 1,000 ka profit. And then cash bank to JLP 5,000 for money received. No problem in ledger posting, no doubt, nothing. So first, and this process we can follow in case of sale or purchase of asset also. Yes. Sale asset or liability taken over by a partner also. Yes. You'll always first pass entry for profit or loss. Second pass entry for money received. Am I clear? Yes, sir. Now chartered. Are you able to see? Yes, no, yes, sir. Now, hello. Now chartered. Third question states, do not show JLP. Do not show JLP in. Do not show JLP in balance sheet. Then you will pass the entry gaining partner to sacrificing partner. If you don't want to show JLP in the balance sheet, you will pass the entry gaining partner to sacrificing partner. Why? Because first you will increase JLP and then you will reduce JLP. Am I clear? Yes, sir. So step 1 PSR, step 2 valuation of goodwill, step 3 treatment of goodwill, step 4 special adjustments. What is PL suspense? PL suspense means share of profit. PL suspense means share of profit of deceased partner, share of profit of deceased partner in the year of death. Share of profit of deceased partner in the year of death. That means in the year of death, that is for the period from year starting to date of death. Year starting to date of death. Share of profit of the deceased partner. Suppose deceased partner died during the year. Suppose year starting is 1st January, he died on 1st January and he died on 31st of March. Year starting is 1st of January and he died on 31st of March started. Then 3 months ka share of profit he should get, he should not get, he should get. So that share of profit is known as PL suspense, because when we pass the entry PL suspense to deceased partners capital account. PL suspense to deceased partners capital account. Am I clear? Yes, sir. Sir, why it is called PL suspense? Because actual profit is unknown and actual profit is yet to be earned. Unknown, that's why suspense. Yet to be earned, that means it is receivable, therefore asset. Oh, it is unknown, therefore it is suspense, and it is yet to be earned, receivable, therefore it is asset. Oh, simple. Yeah, correct. So step 4 you have done. Now charted. Step 5. Step 5. Revaluation account or memorandum revaluation. Revaluation account or memorandum revaluation. Memorandum revaluation. When do we prepare memorandum revaluation? When partners decide not to. When partners decide not to, or decide to show old book values in new balance sheet. When partners decide to show old book values in new balance sheet. Now charted, in this case, we divide memorandum revaluation into 2 parts. First part, second part. First part, prepare revaluation account as usual and share its profit among old partners in old PSR. Prepare revaluation account as usual and share its profit among old partners in old PSR. Correct? But you have to bring back the assets to its original value. But you have to bring back the assets to its original value charted. That means whatever revaluation we have done, that you have to cancel. You have to bring back the assets to its original value. That means whatever revaluation we have to done, that we need to cancel. So reverse entire revaluation account. Reverse entire revaluation account and share loss of second partner. Share loss of second part among old partners in old PSR. If you combine these first part and second partner, beta, you will again get gaining partner to sacrificing partner only. So whenever in this entire partnership there is a fundamental, whenever you want to show asset or liability, at its original value only, then first increase old partners, then decrease all partners. So entry will always be gaining partner to sacrificing partner. It can happen in case of reserves and surplus. When partners decide to show reserves and surplus at its original value, gaining partner to sacrificing partner. Goodwill, gaining partner to sacrificing partner. Why? Because goodwill cannot be shown in the balance sheet. Memorandum revaluation, you want to show all the assets and liabilities at old value, gaining partner to sacrificing partner. JLP, when you want to show the old value in new balance sheet, again gaining partner to sacrificing partner. So entire partnership, whenever you want to show old value of asset or liability in new balance sheet, you will always pass the entry gaining partner to sacrificing partner. Am I clear? Now charted. Step 6, capital account. Step 6. Can you please ensure that today's class is uploaded on YouTube, as I won't be able to attend class. It is already going on in YouTube. Morning, sir. Achhi. Karthik. How's your health? Better, Karthik. Much better. Sir, shouldn't we share among new partners for memorandum? Oh, sorry. All partners in new PSR. All partners in new PSR. I was saying that, writing it down. Step 6. Step 6 is what? Step 6 is partners capital account. Partners capital account में first opening balance, then second reserves and surplus. Correct? Third, treatment of goodwill. Fourth, special adjustments. Fifth, revaluation profit or loss. After revaluation profit or loss charted, After revaluation, profit or loss charted. Sixth, if there is no capital adjustment, that means adjustment relating to capital. If there is no capital adjustment, then close capital account with to balance carried down. Then close capital account with to balance carried down. Aditya, good morning. Yes, I am fine now. If there is capital adjustment, if there is capital adjustment, thank you. Then what will you do? First, solve capital adjustment and find closing balance. Then first solve capital adjustment and find closing balance. Second, balance capital account, that means balancing figure of capital account with to cash bank or by cash bank. That means either partners will bring in cash or partners will withdraw cash. So if there is no capital adjustment, life is simple. You write to balance carried down, done. If there is capital adjustment charted, then what will you do? If there is capital adjustment charted, then what will you do? If there is capital adjustment, solve the capital adjustment, you will get closing balance. And the balancing figure of capital account charted and the balancing figure of capital account will be either to cash or by cash. That means either they are bringing in cash or they are withdrawing cash. Am I clear? Yes? No? Yes, sir. Chalo. Number 7. Cash or bank account. Step 8. Step 8 is balance sheet. Correct? Step 9, journals. Now charted step 7, when you are preparing cash bank account, you will look at two things. One is special adjustment and one is capital. In balance sheet, when you prepare balance sheet, you will again look at two things. Old balance sheet plus special adjustment. When you are passing the journals, you will look at two accounts only. Revaluation account, capital account. All the items appearing in revaluation account and capital account, you are supposed to pass the journal entry. Now, you may have various opinions, but we will follow this I'll tell you why. Because step 1 PSR, I'll always show it to the examiner. This is old PSR, this is new PSR. Step 2 valuation of goodwill. If it was there, you will do it in working note. I do it in step. Step 3 treatment of goodwill. You will do it in working note. I have done it in step. Step 4 special adjustment. You will try to do it in your mind. I'll do it on the paper. Revaluation account, you will do it, I'll do it. Capital account, you will do it, I'll do it. Cash and bank account, you will do add less, I will do capital cash bank account, it will help. Balance sheet, you will do, I will do. Journal entries, you will do, I will do. But journal entries, when I am preparing, I will do only look at revaluation account and capital account and nothing else. As many items are there in revaluation account and capital account, I'll pass the journal entries of all the items. Sir, once again, whatever items are there in revaluation account and capital account, pass the journal entries for all the items. Am I clear? If the question has journal entries and no balance sheet, if the question has journal entries and no balance sheet, then chartered, step 9 will become step 7. Am I clear? Yes. So this is your entire partnership ka basic. PSR, valuation of goodwill, treatment of goodwill. Treatment of goodwill mein right of book value, gaining partner to sacrificing partner. If new partner brings in cash, if old partners withdraw cash, special adjustment, asset or liability sold or taken over, rectification of errors, JLP. I have done 3 situations. There are only 3 situations possible or not. 4th situation is not there. 5th, PL suspense, that is share of profit, memorandum revaluation or memorandum revaluation, partners capital account. There are only 5 items. There is no 6th item on earth. First item, opening balance. Second item, revaluation. Third item, treatment of goodwill. Fourth item, special adjustment. Fifth item, revaluation. That's it. There is no 6th item. Please don't read the question 10 times to find out which is the 6th item. There is no 6th item. Cash bank. Must. If you want, you can take a photograph of this. Absolutely. 221142. So can you please just repeat the memorandum revaluation? Memorandum revaluation is in 2 parts. First part is normal revaluation. Profit will go to old partners. Second part is reverse entire revaluation. Loss will go to all partners in new PS. Correct? Correct? Can I repeat the 5 items? Opening balance, reserves and surplus, treatment of goodwill, special adjustment, revaluation. This first page ka, the second page. I have written all the items. Take the photo. Chalo. Thereafter chartered. Concept of hidden goodwill. Concept of hidden goodwill. Now chartered, what is hidden goodwill? Suppose A is to B, 3 is to 2, A's capital 70,000, B's capital 80,000, reserve and surplus 50,000, revaluation profit 20,000. If there is revaluation profit, if there is memorandum revaluation, then this will become 0 because revaluation profit, revaluation loss. So, in case of memorandum revaluation, this profit will become 0. Correct? Sir, profit का symbol is pi. Land, labor, capital, organization. Capital earns profit and symbol of profit is pi. Correct? Okay. C comes in for 1/5 share and brings 75,000 as capital. Correct? Calculate goodwill. Chale? Now, C, share of profit, capital. C is a share of profit is how much? 1/5. Correct? For 1/5 his capital is how much? 75. Therefore, total capital 1. If total capital is 1, total capital should be how much? 75 into 5. Total capital should be 75 into 5. 75 into 5 is how much? 3,75,000. But A plus B plus C is equal to how much? A का capital 70, B का capital 80, reserves 50, revaluation profit 20. Therefore, this is A plus B and C का capital is how much? 75. So, can you tell me what is the total capital? 70 plus 80, 150, 150 plus 50 is 200, 220, 295. 295. Correct, no? 70, 80 is 150, 150, 2 lakhs, 2 lakhs 20 and C ka capital 75. That is 2 lakh 95. 2 lakh 95. Therefore, total capital should be how much? 375, but the present total capital is how much? 295. That means 80,000. That means 80,000 is an intangible capital which you cannot see. Capital should have been 375, but it is only 295. Therefore, 80,000 minus this 80,000 is the capital which you cannot see. Intangible capital, that is nothing but goodwill. Correcta, incorrecta? Correcta. Now charted. No. चले now. Now. This question came in RTP of December 23. Ved, Jain and Agarwal are in partnership sharing profit and losses in the ratio of 2:5:3. The balance sheet of the partnership as on 31st of December 2022 was as follows. Balance sheet of Messrs. Ved, Jain and Agarwal. Capital. This is on 31st of December 2022. 255, 945, 675. This is the balance sheet. The partnership, if that means they're talking about the year 1/1/22 to 31st December 22 full year, and this is at the end of the year, therefore closing capital. Partnership earned a profit of 6 lakhs in 2022 and partners withdrew 4,50,000 during the year. Normal rate of return is how much? 30%. You are required to calculate the value of goodwill on the basis of 5 years purchase of super profits. For this purpose, calculate super profits using average capital employed. 5 years purchase of super profits. Super profits is what? Average profit minus normal profit. Correct? But this should be calculated using what? Average capital. Now, super profit into 5 years purchase. So, super profit into 5 years. How do we calculate super profit? Average profit minus normal profit. What is average profit in this question? 6 lakhs given. What is normal profit? Normal profit is rate of return into capital employed. Yes, rate of return is how much? 30%. What is capital employed? Capital employed is capital, which is given in the question as 1875. But they are saying on average capital employed. Average capital employed is equal to opening capital plus closing capital divided by 2. Correct? Closing capital they have given, opening capital has not given. So first we need to calculate opening capital. Then we need to calculate average capital. Correct? Then we'll calculate the value of goodwill. Am I clear? Yes. Shall we start? Yes. Now charted. Number 1. Calculation of opening capital. Correct? Now charted. Opening capital plus net profit minus drawing is equal to closing capital. Opening capital plus net profit minus drawings is equal to closing capital. Barobar? Yes, sir. Thereafter, opening capital is how much? I don't know. But net profit is how much? 6 lakhs. Minus drawings. Drawings is 4,50,000. Is equal to closing capital 1875. If you solve this, you will get opening capital, that is 1875. 1875 is 255 plus 945 plus 675. 1875. Correct? Opening capital plus net profit minus drawings is equal to closing capital. Now charted, tell me, opening capital is how much? 17,25,000. Number 2. Average capital. Average capital is plus closing capital divided by 2. So opening capital is how much? Opening capital is 17, 25 plus closing capital 1875 divided by 2. That will give you how much? 1875 plus 1725 divided by 2. 36 divided by 2, 18 lakhs. Correct? Number 3. Valuation of goodwill. Number 4, valuation of goodwill. That is average profit 6 lakhs, normal profit is equal to rate of return 30% into average capital 18 lakhs, that is 5 lakh 40,000. Average profit minus normal profit, that gives you super profits 60,000 into years of purchase 5 years. Therefore goodwill is equal to 3 lakhs. Correct? सब एडिट कर रहा है, नल एक बैठ के. Now, correct? Now charted. Shall we move ahead? Yes. Now we will do one more question which had come in this exam. Treatment of goodwill. Here. This is treatment of goodwill ka question which came in this examination. Now, gaining now. How many partners you will be able to see? P, Q, R, S, T. So P, Q, R, S, T are partners. Now, P, Q, R, S. P, Q, R, S, T. Now charted. Correct? Okay. Now, P, Q, R, S, T. On 1st April, now, on 1st April, there is a drama. On 1st July, there is a drama. On 1st September, there is a drama. On 1st April 24, there is a drama. Correct? Now, Mr. P was carrying on business On 1st April 2020, one minute. Now, Mr. P was carrying on business on 1st April 2023, admitted Q as a partner, giving him 1/4 profit. It was agreed that the goodwill of the firm would be rupees 24,000. Fair enough. So 1st April P was carrying on business. So 24,000 belonged to whom? 24,000 was entire P's. Then in future this 24,000 would belong to whom? P and Q. In which ratio? Giving him 1/4 share of profit. If Q is getting 1/4, that means P is having 3/4, therefore ratio will become 3:1, that is 18 and 6. Correct? From 24 you will subtract 18. This happened on which date? 1st April 23. Then chartered again on, you can do this way then. Now, so if you see A, P ka share was 24, in future it became 18. So P is gaining or sacrificing? Gaining. Sacrificing. 6,000 sacrifice, 6,000 gain. Correct? Now chartered came 1,723. R was admitted as a partner and it was agreed that goodwill of the firm be determined at 40,000 and new profit sharing ratio between P, Q and R will be 3:1:1. 1,723. Goodwill of the firm is 40,000. First it will go in the ratio 3:1. Is 30,000, 10,000. Then chartered 40,000 in the ratio 3:1:1. 40,000 in the ratio 3:1:1. 3:1:1. 40 is divided by 5. 8 3 ja 24. 24. 24. Now chartered, this is B. 30 and 24. So 6,000 again sacrifice. 10 say 24. 14,000 gain. 24,000 gain. Correct? Yes. After 1/7 chartered, 1st September, S was admitted as a partner. This time the goodwill is valued at 72. So 24, 8, sorry. 8, 8. So 2000 sacrifice, 8000 gain. Correct, Adit. Now, thereafter chartered 30th September को S was also admitted as a partner. At this time, Goodwill was 72 and they agreed 3:1:1:1. So first is 1st September 23, 72,000 in the ratio 3:1. 72,000 chartered in the ratio 3:1. That is divided by 4, 18, 18 3 ja. 3:1:1. That time 3 partners were there. So 3:1:1. 3, 1, 1, that is 5. 72,000 by 5. That is 14,400. 14,400 into 3. 43,200. 14,400. 14,400. 14,400. Then 72,000 1 minute. 28. Then 72,000 in the ratio 3:1:1:1. That is 1, 6, 12. 12 3 ja 36. 12, 12, 12. Correct. Therefore, chartered. Na, 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 na. Now. Correct. Now, 43,236,000. Gain or sacrifice? Sacrifice, how much? 7,200 sacrifice. 2,400 sacrifice. 2,400 sacrifice. 12,000 gain. Now chartered after 1/9, it is 1st April. T was admitted as a partner, Goodwill was 96. 1st April 24. Goodwill 96. That is 3:1:1:1. That is 6, 6, 16, 16 3 ja 16 3 ja 48. 48, then 16, then again 96. It was decided that T was admitted as a partner. Goodwill was agreed at 96. Net profit sharing ratio between P, Q, S, T now would be 5, 4, 3, 4. Now 5, 4, 3, 4. And all these agreements were about Goodwill have not taken into account on 1st April. R retires and T is admitted. 5, 4, 3, 4. And who retires? R. So 5 plus 4, 9, 9 plus 3, 12, 12 plus 4, 16, 16, 6 are 96. Therefore 30, 24, 18, 24. Now chartered A, B, C, D. 48 से 38. 18 sacrifice. 20, 48 से 30. 16 से 24. 8,000 gain. 16,000 sacrifice. 2,000 gain. 24,000 gain. The sacrifice is 18 plus 16, 34. And gain is 8 plus 2, 10, 34. Now chartered. We are supposed to pass the entry gaining partner to sacrificing partner. Correct now? Yes, no. Anywhere? Any mistake? You are writing the numbers, I don't know. Now I'll combine A plus B plus C plus D. 6,000 sacrifice, 6,000 sacrifice, 7,200 sacrifice, 18,000 sacrifice, all sacrifice. So 6 plus 6, 12, 12 plus 7, 19, 19 plus 18, 37,200. 37,200 sacrifice. 6,000 gain. 8,000 gain. 6 plus 2, 8 gain. No, so 6 plus 8, 14 gain. And 2 sacrifice, 2,400 sacrifice. That means 4,400 sacrifice. So 14 minus 4, 4. It is 9,600. Gain is more. Gain. Correct? Now, eight gain. 2, 4 sacrifice, 16 sacrifice. So 16 minus 8, 10, 8, 8 plus 2,400. That is 10,400. 10,400 sacrifice. Then gain, 14,000 gain. 24,000 gain. Now charted the journal entry is gaining partner to sacrificing partner. Who is the gaining partner? Q. Now Q 9,600. PQRS 14,000 gain. T 24,000 gain. Gaining partner to sacrificing partner 37,200. PQR 10,400. So it is gaining partner to sacrificing partner. They understood. Old ratio, new ratio, old ratio, new ratio. This is how you find out treatment of goodwill. This is how you find out treatment of goodwill chartered. Am I clear? Yes, sir. No, sir. Understood. बोलो ना now. No sir. Now should know who wrote something. Then we have to show only this working note and we will get full marks. Yes, this is what institute also has done. No. You want to see? We'll show. Institute has done 2 working notes. See, this is the journal entry. This is the journal entry. Working note, the traditional method. Ratio. This is going on. And this is 1. Alternatively, 1 table. JU 221142. You did not understand. What you did not understand? Tell me. I went on passing gaining partner to sacrificing partner. Gaining partner to sacrificing partner. 24 old, 18 new. So I am sacrificing. If old is more, new is less, that means I am sacrificing. Over here, I am gaining. Edit sir, I meant there is no mistake. Oh, thank you. Simple. Gaining partner to sacrificing partner. Must. I was looking for such a long time, but I got it this time. Institute only give it. Now, thereafter, let me do one more question. Peter, Paul and Prince. This is there in institute material also. Peter, Paul and Prince. I understood. Peter, Paul and Prince were partners sharing profit and losses in the ratio 2:1:1. It was provided in the partnership deed that in the event of retirement or death of a partner, his legal representatives would be paid the balance in the capital account. Okay. His share of goodwill of the firm valued at 2 years purchase of normal average profits after charging interest or fixed capital for the last 3 years to 31st December preceding the retirement or death. Okay. That means how many partners are there? P1, P2, P3 and the profit sharing ratio is 1:1:1. So point number 1. There are 3 partners P1, P2, P3 in the ratio 2:1:1. Correct? Thereafter, his share of goodwill is equal to 2 years purchase of normal average profits after charging interest on capital for last 3 years to 31st December preceding the retirement or death. That means number 2. Goodwill is valued at average profit into 3 years of purchase. Average profit into 3 years of purchase. Now, goodwill is equal to average profit into 2 years of purchase. Average profit has 3 varieties. Average normal profit. It should be after interest on capital. and it is average profit of 3 years before his year of death. That means if he died in 2016, then 15, 14, 13, that way. 3 years of death. Where it is written? It is given over here. Average profit for last 3 years to 31st December. That means if he died on, say, 16th May 2016, then preceding 31st December is 31st December 2015. So 15, 14 and 13. Am I clear? Yes, sir. No, sir. Yes. His share of profit from the beginning of the accounting year to the date of retirement or death, which shall be taken on the basis of proportionate profit of previous year as increased by 25%. Oh my God. That means chartered deceased partner share of profit is equal to year starting to date of death. Suppose it is 5 months, then 5 months proportionate profit, that means divided by 12. 5 months proportionate profit. 5 months profit, 5 months proportionate profit means 5 months divided by 12 of what? Previous year's profit as increased by 25%. Previous year's profit as increased by 25%. Interest on fixed capital 10% per annum, though payable to the partners, will not be payable in the year of retirement or death. Though payable to the partners will not be payable in the year of retirement or death. Who will not be payable? Deceased partner will not be payable. So number 4, interest on capital is equal to 10%, but it will not be payable in the to deceased partner in the year of the year he dies. In that year he will not get any interest on capital. Correct? Number 1, 2, 3, 4. Then all assets to be revalued. Very good. Peter died on 30th September. That means P1 died on 30th of September. On 30th of September 2016. That means 3 years are which 3 years? 2015, 2014 and 2013. These are the 3 years. And he died on 30th September. That means he is entitled to 9 months profit. Previous year over here is 2015 because he died in which year? 2016. Therefore, previous year is 2015. Sir, can you explain third step? Yeah, he died on 30th September. So, year starting to 30th September is how many months? 9 months ka share of profit based on previous year's profit as increased by 25%. It is given in the question. His share of profit from the beginning of the accounting year, that is year starting, to the date of retirement or death, which shall be proportionate, that means divided by 12. Profits of previous year as increased by 25%. Sir, no sir. Yes, sir. Thereafter, so we have done adjustment number 1, 2, 3, 4, 5. He died in 2016, 30th September, so he would be entitled to 9 months share of profit, and previous year previous to his death will be 2050. This is done. Balance of fixed capital is 1055, current account is 2010-7, and drawings is 10. 1055, 20, 10-7, and drawings. Point number 5. Now charted. Capital account, current account, drawing. 1, T3. Capital 10, 5, 5, 20, 10, 7, drawings 10,000. Now charted. Correct? Now, six. Now chartered, that is that. Profit before charging interest were 1 lakh, 120 and 150. These are the profits. Profit on sale of asset. This should be subtracted from profit. Why? Because this is non-business profit, non-operating profit. Insurance claim received. This also should be subtracted from profit. Why? Because this is also non-operating or non-business profit. Correct? Yes. Joint life policy. Profits. Refer. Question. Joint life policy. Now chartered joint life policy. There is jointly. Joint life policy, that is jointly. Jointly it is 1 lakh. Severally, that means individually, P1, P2, P3. It is given severally insured for 50,000 each. Premium in respect of being paid by the firm. The surrender value is 30,000 of the face value. So, chartered policy value is 50,000 each and 50,000 each. Surrender value 30%. Surrender value 30% chartered, that is 15, 50, 30%. The partner who died, his surrender value will be policy value, and the partners who survived, their surrender value will be considered, because if I am dying, my policy ka policy value I will get, but the partners who are there, their policy ka surrender value I will get. Why their policy ka surrender value will get? Why will you get share of their policy? That I explained you in the beginning already. A joint life policy is asset of the firm. All the partners have right in joint life policy irrespective of whose name it is. It is the asset of the firm. Premium is paid by the firm. Money will be received by the firm. Only name is of partner. Understood? Yes or no? Yes, sir. आगे बढ़े. मेरा बाल ठीक लग रहा है ना? हेयर स्टाइल. हाँ हाँ सर. वेरी गुड. Understood? Yes sir. No sir. Now, charted. Thereafter, it is given on 30th June 2016. On 30th June 2016, the firm received a notice from the insurance company that insurance premium in respect of fire policy has been undercharged to the extent of 6,000 in the previous year and the firm has to pay. Oh my God. Last year ka, that is 2015 ka insurance premium is undercharged. That means 6,000 ka insurance premium we did not pay. So that is outstanding. Yes, the outstanding should be credited to outstanding insurance premium. This outstanding insurance premium is of 2015. Yes. So 2015 May, this premium, if you record, your profit will come down. This premium is of 2015, which is not recorded. Yes. If you record this premium in 2015, the profit of 2015 will come down. Yes. The profit, if you want to bring it down, you have to adjust the profit. Then you will write PL adjustment. 6,000. Now charted PL adjustment will have two impacts. First, reduce profit of 2015 by 6,000, and secondly, P1, P2, P3 to PL adjustment. That means reduce partner's capital account. What is the ratio? 211. 1,500, 211, 3,000, 1,500, 1,500. So profit will reduce and capital account will also reduce. Bolo na? Correct? Yeah. Now, so that we have done. Revaluation of assets indicates upward revaluation of 20,000. So there is an upward revaluation of 20,000. Upward revaluation of 20,000. Now charted, we are supposed to do 4 working notes over here. How many? 4. Capital account में 4 working notes. Number 1, valuation of goodwill. Number 2 is JLP. Number 3, share of profit. Number 4, revaluation. So let's start. Number 1. Valuation of goodwill. Valuation of goodwill chartered. Valuation of goodwill. Now, valuation of goodwill mein what will I take? I will say valuation of goodwill mein profits is how much? 1 lakh, 120 and 150. 150, this will reduce by 6,000. Why? Because this is profit of 2015. Correct? So, profit 2000, 13, 2014, 2015. Correct? Now, how much is the profit? 1 lakh, 120, 144. Why 144 chartered? Because it was 1 lakh 50 minus 6,000 last year का outstanding insurance policy. Correct? Yes. From this you subtract profit on sale of assets and insurance claim received. Profit on sale of assets 5,000, 7,000, 10,000. Then insurance claim received 3,000 and 12,000. Insurance claim received 3,000 and 12,000. Insurance claim received 3,000 and 12,000. So that will become 92. 1 lakh 30 and 1 lakh 22. Now, average profit before interest on capital was 92 plus 113 plus 122 divided by 3 years. 1 lakh 9,000. Understood? Yes. Thereafter, less interest on capital at the rate of 10% on 20,000. Correct? So that comes to 2,000. So then you will get average profit after IOC 1,07,000. 20,000, 2,000. So we will get average profit after IOC 1,07,000. Correct? Years of purchase 2 years. Years of purchase 2 years. Therefore, goodwill is equal to 2,14,000. Goodwill is equal to 2,14,000. Now charted. Correct? Who died? P1. P1 share of goodwill. P1's share of goodwill is 2 by 4 his share of profit into 2,14,000 1,07,000. Correct. This is valuation of goodwill. Second is charted share of profit. Number 2. Share of profit of P1. Share of profit of P1 for 2016 for 9 months. P is a share of profit for 2016. P is a share of profit of 9 months of 2016. P is a share of profit. P is a share of profit for 9 months of 2016. Now charted profit for 2015. Profit of 2015. 1,44,000 that we have seen over here. 144. Correct. This is profit of 2015. Thereafter charted, add 25%. It is 36,000. That becomes profit of 2016. 1,80,000. Interest on capital P2 plus P3 is equal to. Why? Because P1 is the deceased partner. Deceased partner will not get his share of profit of 2016 in the year of death. IOC, but it will not be payable to deceased partner in the year of death. That means P1 will not get. P2 and P3 will get. P2 and P3 ka capital. P2 is 5, P3 is 5. So 5 plus 5, 10, 10 ka 10%. It is 10% of 5,000 plus that means divisible profit of 2060 equal to 1,79,000 is equal to 1,79,000. Now, P1's share of profit, P1's share of profit of 9 months, P1's share of 9 months profit of 2016 is equal to 1,79,000 into 9 months by 12 months, because we are interested only in 9 months profit, into his share of profit 2 by 4 is 67,125. Correct? 67,125. Now, number 3 charted. Revaluation account. Now charted in the question it is stated that there is an upward revaluation of 20,000. So fixed asset has gone up by 20,000. This is again an institute material question. It's a beautiful question. All these are coming soon. By fixed asset 20,000 to profit 20,000. This profit you will distribute to P1, P2, P3. P1, P2, P3. In which ratio? 2:1:1. 10, 5. Correct. Yes, sir. No, sir. Yes, sir. Number 4, JLP. Now, JLP में P1's share of individual life insurance policy. Individual is how much? 1 lakh. 1 lakh का his share will be 2/4. So 2/4 into 1 lakh plus individual का his share, his policy का policy value and remaining policy का surrender value. The partner who died, his share, his policy का policy value and remaining policy का surrender value. Correct? Plus 2/4 into 50 plus 15 plus 15. 50 plus 15 plus 50. That is 50,000 plus 50 plus 15 plus 15. 15 plus 15, 30, 30, 80, 40,000. Become 90,000. Correct? Now charted. Now charted. Now I am supposed to prepare 4 working notes are done. P1's capital account. Capital account. In deceased partner's capital account charted, how many things will come? In deceased partner's capital account charted, how many things will come? I will write all. He will get his share of capital, his capital. So by balance brought down. What is his P1's capital? 10,000. He will get his current account balance. That is how much? 20,000. From that we will withdraw his drawings. How much? 10,000. he will get his share of interest on capital. But in this sum, in the year of death, he is not supposed to get interest on capital. We will give them interest on drawings. That is also not there in this question. We will give him his share of profit, PL suspense, that we have calculated as 67,125. His capital, his current IOC, IOD and profit. Now chartered, thereafter we will give him by share of reserves and surplus. That is not there. By P2 and P3, share of goodwill. His share of goodwill is how much? 1,07,000. Reserves and surplus, share of goodwill. Revaluation profit. His share of revaluation profit, 10,000. His share of JLP. Reserves, goodwill, revaluation, JLP. Reserves, goodwill, revaluation, JLP. His share of JLP is how much? 90,000. Correct? Thereafter, 2 PL adjustment. Rectification of error. 2 PL adjustment charted. We will take 3,000 from him. Here it is. Correct? His share of policy value, 221142. Correct? Remaining would be transferred to his executors. Tell me. No, 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 no. Correct? Now chartered. How much it comes to? Tell me, no, 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 no. How much this is? No, this is wrong. 264, 125 is not the correct answer. 291, 125. Correct? No, 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 no. No, 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 no. Nin, nin, nin. No, 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 no. 291. Correct? Now we take a break of 5 minutes, and after 5 minutes, we will start with this year ka question. This attempt ka question. Correct? Thank you, Acha. Now, no, 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 no. 12. 1 minute. This is this attempt's question paper. Then now. Now, chalo. So this is the question which came in this attempt. Now, chartered P and Q have been sharing profit, have been carrying on the business in the name of Bharat Springs in partnership, sharing profits in the ratio 2:3. Their balance sheet as on 31st of March 2024 has been as follows. Capital PQ, general reserve, creditors, bills payable, building, plant, furniture, debtors, bills receivable, stock in bank. On 1st April, they admit Z, that is just the next day. They admit Z. They admit R into the partnership, giving him 1/5 share in future profits on the following terms. R will bring rupees 80,000 as his share of capital. Acha. R will bring his share of capital 80,000, but is unable to bring in cash for his share of goodwill. It was decided to calculate goodwill. It was decided to calculate goodwill of the firm based on R's share of profit and the capital contribution made by him. It was decided to calculate goodwill of the firm based on R's share of profit and the capital contributed by him. This is nothing but chartered hidden goodwill. Partners will not withdraw their share of goodwill, nor goodwill will appear in the books, not required. General reserve will be transferred to partners' capital account, that is common sense. Provision for doubtful debt is to be made at 2%. A liability of creditors 1440 is to be written back as no longer payable. Stock shall be written down by 10%. Building is to be revalued at 1 lakh and plant at 60,000 and furniture at 20. Provision 2%. That is 960. Correct. Then liability 1440 is to be written down. Therefore, creditors will come down by 1440. Then chartered stock to be written down by 10%. Stock will come down by 5480. Correct. Thereafter, building is to be revalued at 1 lakh. So, building will increase by 15,000. Thereafter, chartered plant at 60. So, plant will increase by 5,000 and furniture at 24, so furniture will decrease by 2,700. Partners agreed to that the values of assets and liabilities will remain the same. That means we are supposed to prepare memorandum revaluation. Chartered, that means we are supposed to prepare memorandum revaluation. Correct? Now chartered. Step 1. Profit sharing ratio. Step 1. Profit sharing ratio. PQ 2:3. 2:3. R comes in for 1/5 share. Therefore, let's assume in profit. Assume profit 2 and 3 के लिए 5 and 1/5 के लिए 5. Therefore, let's assume profit to be 25. Minimum profit that will be divisible between A and B. Minimum profit that will be divisible between A and B is 2 plus 3, 5. And minimum profit that will go to R is 5. So 5 5s are 25. That will distribute between P, Q and R. Goodwill profit (25) in the ratio 2:3. That means 10 and 15. If 25 was the profit, it was going to P and Q in the ratio 2:3. That means P used to get 10, Q used to get 50. Then profit 25 into 1/5. C will get 25 into 1/5, that is 5. Sorry, R. R will get 1/5 of 25, that is 5. But who will give him 25? Who will give him 25? P3, Q2. Correct? That means this 2:3. P will give him 2. Q will give him 3. 2:3. So they will be left with 8:12:5. That is their new profit sharing ratio. Total profit 25. 25 was shared in the ratio 10, 15. Q wanted 1/5. 1/5 of 25. Sorry, R wanted 1/5. 1/5 of 25. R wanted 5. But who will give this 5? P and Q in which ratio? 2:3. Therefore, P will give 2, Q will give 3. So, P will be left with 10 minus 8. Sorry, 10 minus 2, 8. 15 minus 12. Number 2. Step 2. Valuation of goodwill. Valuation of goodwill. Now, R is a new partner. His share is 1/5 and he brings capital of how much? 80,000. Therefore, total capital 1 is equal to 80,000 into 5, 4 lakhs. Total capital. A plus B plus C का capital. A का capital is how much? PQR. Total capital is P का capital is how much? 80. Q का capital 160, reserves 50, revaluation profit 0. Why? Because we are following memorandum revaluation. If we were following revaluation, we would have calculated that also. Then R का capital 80. Therefore 80 plus 160, 240, 290, 3,70,000. Therefore chartered goodwill is equal to 30,000. Correct? Yes. Thereafter, number 3. Step 3. Treatment of goodwill. Treatment of goodwill. P Q R. What is the value of goodwill? 30,000. In old ratio, 2:3. 12,000, 18,000. Correct? 2:3 is 12,000 and 18,000. Thereafter, 30,000, 8:12:5. 8:12:5 chartered is how much? That is 30,000 divided by 25, 1,200. 1,200 in this is 9,600, 14,400 and 6,000. Now charted. P is sacrificing. P is sacrificing 2,400. Q is sacrificing 3,600. R is gaining 6,000. So journal entry will become R 6 to P 2,400 to Q 3,600. Correct? And R is bringing in 80,000 bank to R 80,000. Correct? Now charted number step 4. Special adjustment not applicable. Special adjustment not applicable. Chartered not applicable means there is no asset and liability taken over. There is no rectification of error. There is no JLP and there is no share of profit. 4. Asset and liability sold or taken over. JLP, rectification and share of profit. Nothing is there. Number 5. Memorandum revaluation. Memorandum revaluation. Correct? Yes. Now charted first adjustment. Provision 2%, that is 960. To provision for doubtful debts, 960. Thereafter charted liability of creditors is to be written off. Creditors ko payment nakko. If creditors ko you are not supposed to pay, you are happy. By creditors 1440 you are not supposed to pay charted. Very good. I am so happy. Thereafter charted stock should be written down by 10%. Stock you will reduce by 10%, that is 5480 to stock. $5480. Then chartered building to be revalued at 1. Building is how much? 85. It will increase by 15 by building. 15. Thereafter chartered, it is given plant at 60. Plant is how much? 55. It will become 60. So by plant. How much? 5,000. Then chartered furniture. 24. Furniture is how much? 26,700. It is will go down by 2,700 to furniture. Correct? As credit minus debit will give you profit. To profit on revaluation. How much? 12,300. Debit minus credit. Profit on revaluation 12,300. That will be distributed between P's capital, Q's capital in the ratio 2 by 5, 3 by 5. That is how much? 4920 7380. 4920 7380. No, 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 no. Then again, reverse. This is revaluation account. Now reverse entire revaluation account. So all assets and liabilities come back to its original value. Now reverse entire revaluation account so that all assets and liabilities comes back to its original value. Am I clear? By PDD. How much? 960. By stock. How much? 5480. Correct? Then by furniture. 2,700. To creditors. 1440. To building. 15,000. To plant. 5,000. Correct? Yes. Now charted by loss on revaluation. That will be P's capital, Q's capital, R's capital. 8 by 25, 12 by 25, 5 by 25. Tell me, sir, it is 3, 9, 36 5904 2460. Yes, yes, no, yes, yes. Now, partners capital account. Name is PQR. 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 Now charted 5 items. First item is correct note 39365904 and 2460. Correct. Now charted 5 items. First item opening balance, second reserve, third treatment, fourth special adjustment, 5 revaluation. First opening balance. 80,160 and reserves is 50. Now charted. By balance 80,000. 1,60,000. Correct. Then by general reserve 50,000, that is 20,000, 30,000. Then treatment of goodwill R to P to Q. So R में to P and Q 6,000 by R 2400 3600. Correct. Thereafter bank to R. तो R में by bank. Na, 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 na. Then chartered. तो हो गया treatment of goodwill, then revaluation, profit. Special adjustment is not there, then profit on revaluation. Profit on revaluation 4920 7380. To loss on revaluation 3936 5904 and 2460. Opening balance done, reserves done, treatment of goodwill done, special adjustment is not there, revaluation done. Now charted, there is no capital adjustment, only the two balance carried down. Two balance carried down. Bolo bolo, two balance carried down. Na 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 na. सर एक बार बता दो. What बता दो? देविका सिंह, सर एक और बार बता दो. क्या बताऊं एक और बात. चलो, to balance carried down. Now chartered 103 384. Then 195 076 71 540. Correct? Now, thereafter chartered cash and bank. cash bank account. Now, cash bank account में opening balance of cash bank is how much? 83,200. To balance brought down 83,200. Then you will look at special adjustment, not there. And then you will look at capital account. Capital account में there is only one by bank. So bank में 2 are 80,000. By balance carried down 163,200. Now chartered. Step 8. 6. Now 7. Step 8. Partners capital. Partners capital. Sir, why in memorandum revaluation is there in second time only? Sir, why in memorandum revaluation is there in second time only? Matlab? First you did revaluation normal. But question is saying that you are supposed to show all assets and liabilities at original value. So whatever changes you have done through revaluation, reverse that, so all your change gets nullified and assets and liabilities will come back to its original value. This is change of assets and liabilities. This is reversal of change. So if you reverse the change, assets and liability will come back to its original value. Why we are doing this? Because question says partners agreed that the values of assets and liabilities will remain same. Understood, Aditya? Step 8 is balance sheet. Balance sheet. Balance sheet में capital account. PQR 103,384 195,076 71,540. So total has become how much? 3,70,000. Correct, 2211. Then chartered. Assets and liabilities will come at original value. Matlab, that means whatever was the old values, that will only come, except capital reserves and bank. Except capital reserves and bank. Rest all assets and liabilities will appear at same value. Yes sir, no sir. Yes sir. Then bills payable. How much? 16,500. Then creditors 57,800. Then building 85. Plant 55. Furniture 26,700. Debtors 48. Bills receivable 11,600. Stock 54,800. All these are original values only. You can check. Aditya, you did not reply. 85, 55, 26, 700, 48,000, 11, 600 and 54, 800. Eighty-five, 55, 26, 700, 48, 11, 600 and 54, 800. Sir, I have one doubt. If they don't want to show new values of assets and liabilities, then we can simply skip the revaluation. Yeah, there's a tax logic behind it, that why do they show it at, but in crash course I don't want to go into so much of depth. You remember this much now. Bank account. That in my regular class I have explained. If you are from JKC, you can go through that video, you will get it. Aditya, you did not reply. So now check a balance sheet is tallying or not. Bolo bolo, kuch to bolo, no 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 no. 4,44,300. Correct? That's all for the day. Tomorrow we'll do dissolution and piecemeal. We'll come to end with partnership. Then we'll be left with only company account. Bye bye. Thank you.